Hey everybody, it's Mike. Welcome back to Taxes and Bricks. And today we're doing another tax-related video. Today we're going to talk a little bit about charitable contributions and whether or not they're tax deductible. And to the extent that they are, how they might help you. Because there are a few myths or misconceptions that I've come across in the last 8,000 years that I've been helping people with their taxes. So what is a charitable contribution? Well, it's exactly what it sounds like. You take money or items that you own or have, and you give it to a charitable organization as a donation with no strings attached and nothing in exchange. So it's not like you're giving $200 to a charitable organization and they're giving you $200 worth of stuff. You're just giving them the $200. They get to do with it what they want, and you get nothing in return except for that warm fuzzy inside for having donated to a charitable organization. In order for a charitable donation to be deductible, first you need to itemize your deductions. So you need to be itemizing. What does that mean? Well, there are two kinds of sort of deductions, main deductions that everybody gets that files a tax return. There's something called a standard deduction. That's exactly what it sounds like. It's just standardized across the board. You don't need to do anything to get it. Just be filing a tax return, and changes based on whether you're single or married filing jointly, or you're married filing separate, or head of household, or any number of different filing statuses. And that standard deduction, you just get it. But the government says, well, listen, if you've got certain other things that are more than the standard deduction in terms of things like medical, real estate taxes, state and local income taxes, mortgage interest, charitable donations, certain other little miscellaneous deductions, and those added together are more than what we're going to give you for the standard deduction, well then, hey, good for you. You don't have to take the standard. You can itemize. And when you itemize, all of a sudden, besides, medical and state and local income taxes and real estate taxes and mortgage interest, that charitable deduction that you just gave, that becomes kind of a deduction for you. Simple, right? Okay. So what you do is you take your charitable deductions, okay, and you put them on your tax return along with all of the other stuff you've got. And again, if you're over the standard deduction, then you're now itemizing. Okay, so that's how the charitable deductions come in as a deduction, or charitable donations come in as a deduction. Okay, let's talk about some of the little rules with respect to charitable donations, because not every charity is a charity, okay? So in order for a charitable donation to be deductible, it needs to be made to something called a 501c3. What is that numeric, alphabetical, weird gobbledygook? That's the code section in the Internal Revenue Code that governs true charitable organizations that are considered, non-political or non-sort of, other activist type of organizations, because there's a difference in terms of a charity and a nonprofit. Okay, for example, this is a great one. Most condo associations that you may belong to, or HOAs, HOAs that people belong to, those are nonprofits, but they're not charities. They're not under code section 501c3. You have a politician that you like, or whatever, and they have a political action thing, or they've got their own campaign, and they ask you for a donation, and they're a nonprofit. They're not typically a 501c3. They're not a charitable organization for tax purposes. So first, what you want to do is, if you're looking at this sort of charitable donation, you want to see whether or not the organization is a 501c3. Okay, if it is a 501c3 and you give them some money, or you donate a bag of clothing to them, then your donation is considered valid. Okay, a couple of other rules. Yes, you must have proof of the donation. What does that mean? Well, you can't just take a bag of clothes and dump it in one of those bins on the side of the road that says, Acme Foundation or whatever, a big red bin or a green bin or a yellow bin or whatever it is. It looks like a dumpster and people just put their clothes in it, and you can't just dump it in there and be like, woo, I made a charitable donation, I get a deduction. Nope. You don't have a receipt. You don't have some kind of proof that you made the donation. You don't get it. Okay. Same with money. You give, $100 in cash, outside of a supermarket or something like that, at Christmas or the holidays or any random time, you stick a little money in a box somewhere in a store or something, you don't have any proof. So proof is key. You have to have a written letter of the donation, a copy of your canceled check, a copy of the credit card receipt, a itemized list of the stuff in that bag that you handed to a person at the donation center, and they gave you back a little blank receipt that's always blank. You fill it out, put the date on there, put what you donated, put what you think the value is. There's valuation guides online. You can find them on the internet, whatever. Just go Google the Salvation Army Valuation Guide, Google the Goodwill Valuation Guide. There's a Purple Heart Valuation Guide, AMVETS, all these big organizations that take in donations. Okay, do it. Okay, especially if you're itemizing. Why? Well, because these charitable donations actually save you money on your taxes. So let's use a really easy example. Let's say over the course of the year, you donate $750 to your church or synagogue. Okay, and you donate a bag of clothing at a Goodwill center where they give you a receipt and you've itemized it out and you do the valuation and it's $250. So you've got $750 in cash to your church, which you have a receipt and a letter for, or a check or credit card, or whatever you did donation-wise. And then you've got $250 in non-cash donations. That's $1,000 together. Let's say you pay 25% between federal and state. That just saved you $250 in taxes. Your tax is lower by $250. Okay? Same example. Let's say you're super charitable and you donate $10,000 between monetary donations, credit cards, checks, cash that you have receipts and evidence for, and then you have your non-cash charitable contributions, $10,000, and your 25%. You just saved $2,500 in taxes. Okay? So that's how you save money. One of the myths I get, and this is usually like year end, okay, is I will get somebody that comes to me and says, hey, I made a little extra money this year that I wasn't expecting, and I know I'm going to have to pay a lot of tax, but I'd love to just give all that money away to negate the tax. Okay, well, that's great. Okay, and that's certainly going to happen. But I think in people's minds, they may equate the amount of money that they donate with the exact tax saving. So I've had people come to me and say, well, if I give $10,000 to charity, my taxes will be lower by $10,000. That example I just gave you prior proves that that's not true. Okay? $10,000 in donations does not save you $10,000 in taxes. It saves you 10,000 times whatever your tax percentage is, equals tax savings. So 10,000, 25% saves you 2,500. You're still out of pocket $7,500. So if you are thinking about this in terms of totally negating everything, it doesn't exactly work like that. You will be out of pocket. Okay? All right. Let's talk about a couple of other charitable donations that I see a lot. So people donate appreciated stock. What is that? Well, you have a stock that you've had in your portfolio for a while, your investments, and maybe it's grown in value. And you're kind of looking at it and you're like, you know what, I'd really love to just donate that instead of money, and maybe I don't have cash lying around. You don't want to liquidate the stock and pay taxes on it and then have to go and donate the rest. That's dumb. So you kind of think to yourself, I'm making this donation, I don't want to come out of pocket. I'm just going to transfer the shares of stock to a 501c3, a charitable organization. You do that, okay, and the donation value is actually what the fair market value is on the date of the donation. It's not what you paid for it. So you kind of avoid this issue of having to pay taxes on the appreciation, and you get the deduction for the appreciation too. So that's kind of a neat one. People donate cars all the time. God, I hear this one. Man, back a long time ago, this was the greatest deal going. You take some, rusted out hunk of junk in your backyard and you call some, whatever organization, and they bring a tow truck and they flatbed this thing out. Like, problem solved. You have this car that you were having to pay to store on your property, and it was an eyesore, and now somebody just comes and takes it for free, and oh my God, yeah, you get a tax deduction for it. And back in the day, there was kind of the Wild West. Like, you could just look at the Blue Book value on the car, decide it was in excellent shape, perfectly running with, all sorts of modifications to it, and nobody questioned it. Those days are over. Okay? If you donate a car, you have to report it in one of a few ways. Number one, if the organization tells you they're going to take that car and sell it at auction, you have to find out what they sold it for, and that is your donation. Okay, number two, they tell you they're going to sell the car at auction, and they don't because it's a piece of garbage or nobody wanted to buy your rusted out jalopy from the 16th century. You get a $250 donation for the car, basically, okay? The third way is if the charitable organization takes the car and they are going to use it for their operations, or they are going to fix it up and give it to somebody in their sort of sphere to use. So I see this all the time. There's a great charitable organization, and gosh, if I can remember the name, they try and get minivans and small SUVs. And they get them and they want them really only in kind of working order. They spend a little time fixing them up, and then they give them to single mothers and single parents as part of their sort of mission. It's great because at that point, if you are in trouble and you're a single parent or whatever, or even a family and you're in trouble, you can't afford a good car and you need something big to carry your kids around. And believe me, I know I got two. You got to buy the biggest land yacht you can because, bags of diapers and pack-in plays and all the other crap that kids have. I mean, even if you don't have, a lot of resources, kids still come with a lot of baggage. So it's a great organization. They're going to take that car, that minivan that you donated, that truck, that SUV, whatever it is. They're going to use it either to operate their own 501c3, the nonprofit, or they're going to use it to give to another person. You can actually take the Blue Book value at that point. But you need a letter from the organization, really, in any of these circumstances, as to what they're doing with the car, what's the end use of the car, okay? Here's the thing. If you're going to make a tiny little donation and you get the deduction for it, great. If you don't, it's not a big deal. You probably were going to make the donation anyway and you aren't out anything. But if your donations are going to be pretty substantial or you're going to be doing something like appreciated stock or donating a car or donating the facade of your house, that's kind of a popular one in some circles. Donating land to a land trust. I mean, doing all of these other different things. I strongly encourage you before you make the donation to sit down with your tax accountant or a tax accountant and discuss it with them, because in your mind you may be thinking the outcome may be A and in the reality it might be B, and you don't want to get caught doing something good expecting that you might have a positive outcome on your taxes and finding out it's not as positive or maybe it's negative. And that's always disappointing because it can take a really good altruistic act on your part and make it kind of negative. And we don't want that. Charities rely on us and they rely on our donations. And I think that they benefit a lot, these charitable organizations, from the tax code being very preferential to donations and giving a tax benefit to them. And so I think that in order to continue all of that good work and continue supporting charities, the tax code should continue to allow for charitable donations to be a deduction for people. But again, I think you should do your due diligence and check and see what's going on with this stuff before you do it. So just some thoughts on charitable donations, not really, a full, complete rundown of everything. There's a ton of stuff in the charitable code, but these are the basics that we see that the average person who's donating to charity is going to go through in terms of deductions on their taxes. So that's it for today. Thank you for watching. A little longer of a tax video, I think, than I've done the last couples, but thank you for hanging in there. Don't forget to hit that like button, subscribe, share my content with your friends. We're trying to get that subscribership up. I think I'm up to 232 subscribers, which is insane. And the viewership is going pretty good too. I mean, the average video's getting, more than one view from my mom. So I am very happy about that. That's it for today. Thank you for watching. Have a great day. And, good luck this tax season.